This might be the craziest moment in the market since 2020. We've had all type of volatility in 2025, and now it's time to end it with a bang. So let's talk about it. AI fights. Google is rising to take the throne. Nvidia is bleeding. The yen is cracking. Crypto is collapsing. And the Fed, after 2 years of tightening, is quietly about to put money right back into the system. All of this is happening going toward the end of the year. Everybody thinks that this is an AI problem or Michael Burry and his shorts. This is a liquidity story. And if you understand it, then you'll make more money in the next 2 to 3 years than you've ever made before. Because if we have a president that really wants to cut these rates and get them to zero, they've been plastering all over the TVs about the new Fed that they're going to put in place. And the shift is here, and I need us to pay attention to it. So before we get into this video, man, I want you to like, I want you to subscribe, I want you to share this video. I'm going to give you a full breakdown on what I see is happening. We're going to get into the chart, and I'm going to show you a couple of things. And I'm going to talk about 3 companies that I really like going into 2026 that I think we should buy right now because they're on a really serious dip. Google is taking a crown in AI. That's a lot to talk about, right? So as we hear about Michael Burry and his puts on Nvidia and Palantir, I've been continuously the one saying like, bruh, there's no way we could be in this AI bubble. Now, kudos to Michael Burry, 100%. Like, you know, I'm a salute. Like, yo, since he put it in and people done exposed about it, like Nvidia and Palantir they can't get a break. You know what I'm saying? Like, and it is what it is. But it's something powerful to say about the market. What did the market do? They were like, all right, they give him that. And then they pivot to who? Google dropping news consistently since last week. They just keep dropping news. Another partnership with Meta saying, yo, we're going to rock out with Google. And then AVGO, who's quietly been trying to become that number 2 player in the game because they do more than that. And so I'm like, yo, like you see this, you see what's going on right here, right? Like, again, I'm going to say it again. This cannot be an AI bubble when you got real companies that have real profits that's producing real results. Now, nobody's not going to talk about how Michael Burry in 2023 told everybody to sell, 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 and then that didn't go his way, right? Well, he is saying, you know, he shorted Palantir and he shorted Nvidia, and I'm not going to lie, it's working his way. He applying pressure on it, so you got to give him that. But let's talk about this thing, though. Gemini 3 puts Google back in the center of the AI conversations. Investors are asking, is Google the new leader? This alone could really shake markets up. But here's why it gets interesting. Now, I'm not gonna lie, I'm not like an open AI like fanatic. And a lot of people going crazy about open AI. And a lot of people was on that bandwagon saying that, yeah, you know, open AI and Chat GPT gonna put Google out of business. Well, I always say, like, bro, you think Google gonna just lay down quietly? Like, don't forget that Google was the same company that offered themselves to Yahoo Finance, and Yahoo and Yahoo said no. And then Google slightly became the company that just overtook all of that, right? Google has a lot of money. They have a lot of money, which means they have a lot of money to see who their competitor is and say, okay, I see what's going on here. I'm not going to just be stuck on Google search. Remember, Google is the one that's got us addicted to opening up our emails. The way we open up our emails, these people know how to pivot and how to keep moving forward. So I don't really understand how people kept saying it's going to be the end of Google. And what do? They just consistently show us right now, like, yo, we are that guy. We are that company. And so right now, the CEOs of Google is now the second richest people in the world right now. You see that Google is now in a $4 trillion market cap right now and going like, we rock with Google. You know what I'm saying? Again, and with AVGO quietly just building that company out, quietly saying, yo, we're going to compete with Nvidia, right? Saying that out loudly, saying, yo, we're going to compete with Nvidia. Now, I'm not saying that it's over with for Nvidia, 100%. I'm not saying that at all. Like, they're the big dogs, right? They are light years ahead of a lot of people, 100%. But we see the competition growing. We see the competition building. We see people in the game like, nah, we're not going to take this land down. And everybody not about to be folding to y'all. So while Michael Burry may be winning right now with the Palantir play, we're 1 week in, right, on that play that's being talked about. The market has pivoted and the market is getting behind these people. So we cannot deny that. Now, narratives do collide right now. And Nvidia is now, I was telling myself, I feel like I'm watching Billions in real time. I'm watching Nvidia and I'm watching Alex Karp, who is having a true meltdown. I'm not gonna lie, like he's having a real meltdown right now. Defend themselves on Twitter against this guy. And I'm just like, bro, this is crazy, right? So I like Google. I've always said that we should own Google. I'm a fan of Google. We trade Google nonstop. And so I love it. I love to see where this is going at because I'm still bullish on the market overall. Now, let's go a little deeper in what I really want to get into. Well, right now, we know that quantitative tightening will stop December the 1st. Now, when we think about quantitative tightening, you got to think about something. So the Fed is saying that they're going to enhance their balance sheet, right? They going to do some things, right? So QT going to end. So here's a hint. What we understand that I think November 7th, one of the Fed members said, it's time for us to start expanding our balance sheet, meaning the Fed needs to start, buying some more assets. That means liquidity. That's the lifeblood of the markets, right? And it's coming back. So now we see that rate cuts, was one of the things that kind of shifted the market over the last week, right? That was one of the things that tanked the market last week. Jay Powell came out being real hawkish, the day after Donald Trump telling the whole world he gonna fire him, which I kept saying like, bro, that's a bad idea. You don't do that, right? And Jay Powell came out and said, yep, December rate cut not on the table right now. Now that scared the crap out of the market. I'm not gonna lie, that scared the bejesus out of the market. And here's why. One, the market already baked in the 80% odds that the Fed was going to cut rates in December. So when he came out and said that, plus you had the Japanese yen, if you don't know about that, go look at my previous video, spiking up. It was just a perfect storm. And so the market just fell off a cliff. Notice how the next day, that Friday, we had another Fed official come out and say, nah, I think we're going to cut rates in December. And then the market slowly but surely started gaining momentum. And then those odds shifted from 20-something% now to 82% now that we're going to get a price cut in December. And we also have a 72% that we're going to get one in January. So saying that, the markets are now saying, wait a minute now, we got some stuff that might be going our way. So when you add that to the fact that we have a Fed that's saying, yo, we're going to end quantitative tightening, and we are probably going to turn the money printers back on. Now the market gets excited. The Fed is reacting, but we got to think about it. The market is responding, right? The market is responding. The market is saying, we want that money. Because the market loves low rates. The market loves that. So let's think about this, right? So in 2020, and we'll get to the stock, y'all. Like in 2020, in the pandemic, we got to think about this, how this look. The Fed flooded the market with money. The economy took that money and said, okay, we're going to do some things with it. We're going to do PPPs. We're going to do unemployment programs. We're going to do a stimulus check. We're going to do grants for businesses. So it flooded that money. And then once it flooded that money into the market, the next thing it did was, what did it do? Then it gave the money to the people who needed it, right? And then those people, because you didn't have money conscious or you wasn't money savvy, you did what you went out and you spent that money. Right. And so we got to think about something. There's three types of people in America, right? There's the spenders, there's the investors, and then there's the business owners. And all of us fall under the spending class. But when you fall under the spending class and you're not in the investor class or the business owner class, it puts you in a situation to be financially frustrated. And how they put you in a position to be financially frustrated? Well, that's kind of easy. Because what happens then is not only do you only have one stream of income, you're tying everything to the opportunity to only make income from a job, right? And that can hurt you in America because we see that America is set up and America is designed for the entrepreneur and investor. So why I think that moving into 2026, everybody needs to pivot to the entrepreneur. Everybody needs to pivot to the investor. Not saying that everybody needs to be a full-time entrepreneur, but everybody needs to learn how to come to some point and make them some money outside of their job. That's going to be imperative. That's going to be important. Let's dig a little deeper into that. As they start pumping money into the market, right? Let's go back a little bit. Let's take a step back for a second. 2026 is going to be a hell of a year because you already have $7 trillion sitting on the sideline. But then you have a president that's saying, yo, like, I'm going to get to put who I want in here. But mind you, Trump, you don't want to put Jay Powell in there for the first place, right? But Jay Powell is not acting right. per Trump. And so he's going to put somebody in there that's going to do what he wants to do. And what are the things he wants to do? He said it 1,000 times, like interest rate should be 0. Well, that means a lot to businesses. Why? Because they get to give money for cheap. It means a lot to banks because they get to loan that money out, right? But it also means a lot to investors because they get to take that free money and they get to invest it. And that's the thing you want to do. Now, when you get that type of free money in the market, that's going to be inflationary. Why? Because the more money in the market, inflation goes up. That means prices go up. Home goes up. Cars goes up. Rent goes up. Bills go up. Everything go up. So the person who is financially frustrated and the person who's financially shackled down, they going to suffer the consequences from that. Whereas the investor and the entrepreneur and the business owner, they're going to find pockets to be able to get their money out there. They're going to find pockets of way to generate new money. So it's an amazing time for you to be able to say, yo, I want to generate some money. I need to find some new things. And I got a list right here. And I'm going to say this, man. This is one of the things that I don't really like about what's going on right now in the markets, right? I'll just be honest with you. And it's not so much as about the markets that I don't like. I don't like all these people that's on YouTube right now. I don't like all these people that's on Twitter right now. I don't like all these people on Instagram right now that's pushing this crash. It's crazy that we say that because the market has only been down. The S&P was down 5% altogether on the pullback from the high. And QQQ got as low as 7% on the pullback from the high. We'll get on a chart and we'll talk about it. Bro, when has that ever become a crash? And I've said this a million times, man. Everybody will come up with a million stories on how to say something that benefits what they want them to do instead of just saying, bro, like, it's the end of the year. It's a healthy pullback. And I've said this and I've said it again. I've said it a million times. Never in the history of the markets have the market ever crashed when everybody saw the crash coming. Wouldn't be a crash. You think anyone let us prepare for the crash? Not like that. And so, was this healthy pullback needed? 100%. You had a lot of things that was just stretched, right? We went on a run for 8 months, y'all. April, May, June, July, August, September, October. 7 months we was on a run, y'all. The market gotta pull back. And so why I don't like that is because we got people on these platforms that are just, telling people to get out of the market, bro. Sell everything and go. Like, why would you tell that to people? Knowing that the dollar is consistently losing value, knowing that the banks don't help and benefit people when it comes to growing their wealth, knowing that everybody is not an investor, you tell everybody to sell? That's fear-mongering at its finest, man. I just don't like when stuff like that happen because there's people that's new to the market, there's people that's trying to get into the market, and there's people that really want to be confident about building wealth in the market, but they don't know it. So on every headline, all you see is sell. And the crazy part about this is we acting like we haven't seen that. We acting like we haven't been here before. We acting like we haven't been through times where the market goes through turmoil. Yes, this market takes the elevator down and it takes the stairs on the way up. But guess what? It's okay to take the stairs when you know that 75% of the time the market is up and 25% of the time the market is down. That means you got enough time to climb the stairs and get to the top. And that's why I be fighting for people. You can call, here's what I say. You can call me a clown. You can call me all those names. But what you can't deny is that I've showed that I beat the market since 2022. Beating the market on buy and hold, beating the market when it comes to options is what we do. Now, have I taken some hits along the way? Hell yes, I have. Speaking of hits, man, we have a Black Friday deal out right now. You get the Wall Street Trapping course, you get the Options Masterclass, and you get the Trapper Method. These things will teach you. These three together are powerful. You don't need nothing else, right? We're doing for like 90% off. All together is $299 for everything. $299. Together in whole, you're talking about over $5,000, right? Well, we did a big deal because I feel like everybody needs to be in position. Everybody needs to prepare for what's ahead. And that's buying real companies with real revenue, that have real profits, that have real margins, that have real moats. And I think you need to buy these companies. You need to prepare to buy these companies. You need to buy these companies as much as possible. And the problem is people get tricked out their position. So let's go a little further. So then we have an opportunity where you're going to get the president to put the person they want to put in office, the person he wants to put in office, the person he thinks is going to get the race to zero. Then he's talking about these $2,000 stimulus checks they want to give. Now, I would say this. While I don't think that's a good idea, Donald Trump will do what Donald Trump wants to do, and he don't have nobody around him dropping it. So that's probably going to happen too. So we just got to be mindful of that. I think that 2026 is going to be a phenomenal year. I just think that it may be volatile. But if we look at it, we see Goldman Sachs and other people saying, yo, we don't even see a recession for this year at all, or early 26. So that's good. All we got to do if you do feel is like that, don't miss out on all these odds. Don't miss out on all these opportunities just because you're scared. Just don't go all in. Now, before we get into the charts, I want to talk about two stocks that I really like moving forward. I 100 think you should be buying Nvidia right now. I think you should be buying Nvidia right now. I think you should be buying ANET right now, ANET. I think you should be buying APLD right now. I think you should be buying MBIS right now. I think you should be buying CrowdStrike right now. And I think you should be buying Zscaler right now. If they're going to keep it up, I think we should be buying Palo Alto right now. Well, Trap, why are you thinking all them internet stocks? Because we are in an AI revolution. Everybody who I just told you is making real money. And that's how we play this game. Let's get to the charts. So let's first of all, let's look at that. We see the multiple touches right there. But I want to get into something that's real interesting. Let me do this to y'all so y'all can see this. All right, so we can mark this out. We kind of marked it out before. And again, I want to see that. Something that I wanted to see on the S&P, I wanted to see, I wanted to definitely see the S&P close on top of that trend line. I definitely wanted to see that happen. I'm going to just speak that. I definitely wanted to see that happen. That was a big win for me. The next thing I wanted to see was us get back on top of the Twin Towers. I wanted to see us close above those Twin Towers. And we talking about 3 great days. We talking about Friday was a catalyst. We got up off this low down here, which was essential, right? That was the Twin Tower low. That's what I call it. We got off the Twin Tower lows, and then today we had to close above the Twin Tower high. Now, that's what I like. We had to close right above the Twin Tower. We closed this high right here. Now, and we closed above almost there. I like that. So if we can get another close on top of that tomorrow, that would be so good. So right now, you know, we are in a situation where the sellers, you know, the seller's under pressure now, right? Because right here, we know for a fact, right, there was a liquidity grab, but that tells us that buyers and sellers got trapped here. And then this right here tells us for a fact that sellers got trapped. Right, that right there tell us sellers got trapped. How does that tell us sellers got trapped? Well, because you know green candles start at the bottom, and because green candles start at the bottom, and because you got that wick, you know it started here and worked its way down, and because it worked its way down, and then the momentum started going up. That means you got buyers inside of that that's trapped. I mean sellers inside of that's trapped. So now you got some sellers that's really trapped all the way over there. So let's go to here right quick. This is how we're gonna measure this. So right here was previous week's high. Now, tomorrow is going to be important. Tomorrow is going to be important. Now, tomorrow is going to be important because watch this. Now, notice today what we rejected. Today, we rejected last week's high. Right? So what you want to see is, there you go. That way you can see it. Let me make that smaller. So we rejected previous week's high. And previous week's high was 675.56. Now we did get there all the way. Now, as of right now, we above previous week's high. As of right now, as of market close, we're above previous week's high. Right. And so again, that's important to see. Now let's look at this structure a little bit on a 1 hour. Right? On a 1 hour, let's just look at it, see what that structure looks like. This is phenomenal. So what we see right here, if we just take this off a little bit, we can see that that structure right here, we need to get back on top, and we right there, which was previous week's high. So if we can get a close, now notice right here, if you see it, you see this? So this is bias. So now you have some bias trap right here. You got some bias trap right there. We call them late buyers. So they came in late. They were like, oh, I see this. And so they ran up and got in, and they got trapped. Now, we need to see if they're going to get released tomorrow, right? And so if we can get a close on top again, and that'll be great because, I mean, we ain't been up there for a while. You know what I'm saying? We ain't been up there for a while. So we can get a close on top of that. Man, that'll be sweet. Right? We got to get a close on top of that. And then from here, we go here. From here, we go here. Now, bear's dead. That's where you go at. That's what you're looking for. You're looking for 680 and then 685. And if you can get that, bears under real pressure. Now, we can't forget this trend line is still in place. So remember, stocks don't go straight up. So we can also see a pullback right to this trend line. That would be great for us to see. You know, we get a pullback to this previous week. Get a pullback to that break of structure right there. We get a pullback right here. That was how we get a pullback there and come up. That'd be amazing to see right there. And again, you know, markets don't fly. Markets don't just go straight up like that. You know what I'm saying? So it's gonna have some wiggle room inside of that. So we definitely want to see that. So that's a better look at it on a daily. So if we can get that look right there. So this is previous week high right here. So we can get a top of this we can get a candle close on top of that. That'd be great. Because then that'll put us on top of that'll put us all the way on top of that'll get an opening and a close on top of our trend line. And then what you want to see is something like it get here, use that, and then come back up here. So that'd be real cool to see if buyers can do that. Let's go to our cues right quick. It's not really hard. We just pay attention to what the structure is. That's all I like to look at, y'all. Y'all see I already had the cues marked out. I was on the cues earlier. Now, unfortunately for the cues, Nvidia not joining the party, so that's kind of hurting the cues because they got so much strength. You know what I'm saying? Nvidia got so much strength, they not joining the party. But just think of this move that the buyers made without Nvidia. Again, you got trap buyers right here. Came in, you know what I'm saying? Because this morning, that's where it's at. Now, what I will say about that, Nvidia jumped on top of previous day's high, which was good, right? It jumped on top of that Monday's high. We like that. But they closed above, they closed above Monday's high. We like that. And they opened above Friday's high. So we like that. We definitely like that on the Qs. That's look good. But Qs, where we trying to go at Qs. Y'all know where we got to go at. It's simple. We ain't gonna fight about it. We got to get you here. Boom. We got to get you above previous week's high. We got to get you above that. Because long as the Qs are below that, you know, the bear still got roaring power. The bear still got roaring power if we close below that. We got to get on top of those twin towers. And what is the twin towers, you may ask? And again, I say this with I always say no disrespect because I know people who was affected by 9/11, but that's those twin towers right there. We get on top of those twin towers, man, we got action. So definitely is a battle right now. It's definitely a whipsaw market for us. But I will also mention out something too that we did last week that I mentioned in the video. I said a couple things that I don't think people believed me on. And I said, let's just look at it and see. I said, we should be buying Meta here. Why should we be buying Meta here? We looked at it on the RSI, and what did we see? Meta was oversold right here at 585. That was when I bought it. I added it to my daughter's and my own personal buy and hold. Now, what I will say is, you see this line, if I can get on top of there, that would be good. If we can get top on 637, and as you can see, that's a structure break. If we can get on top of 637, I don't mind taking Meta to the upside. We got to get on top of that structure break right there. Here's a huge gap that it has to fill up. You know, I don't mind not being early in there. But if we can get Meta, notice it stopped right at that structure break, right? And if we can get Meta, notice it stopped right at the top of that structure break. But if we can get a close on Meta on top of here, we get a candle close and then another candle coming up. Let's see what the 1 hour look like. Yep. So we get some closes on that. And if I wanted to just go a little bit deeper on the 1 hour, I would definitely come here just to give me something. Probably here would be the best position, just so we know we came above that. Or maybe just here, 641, get a close on top of that. That way, because notice that it came down. It's in a downtrend, so this becomes the impulse. The impulse becomes the downtrend, and the uptrend becomes the correction. So notice it went up, started a base, and then started distributing again. So if we can get on top of that base right there, which is 637. Now I'm eyeing it because it hits my structure. 637, I'm eyeing it because it hit the structure. Close above 641 because we get on top of that. We can go from 641, then we can go into this liquidity pool at 680. I wouldn't mind putting a call in right there. We close above 641. I wouldn't mind putting like a 650 call in. 641, I wouldn't mind putting like a 660 call in. A 680 call in 2 months, 680 call, 90 days, 680 call, going into this liquidity pool right here to see what happens. If Meta can get there, that'll look good. Or does it fall back down to this 635 as my support? Or you come here, 611. I like 611 because that's the base it came from. 615, that's the base it came from. So you put your stop at about 615. If you want to be, I like a little wide stop now, but if you want to be tight, you come right here to the base. You know what I'm saying? You go 623. I think that's really, really tight. The least you could come is here. 618. So I like Meta around that. And the one I talked about on the show, the last one that we did, I talked about Apple. And I said, this was Sunday. We had a call. We was on a live or whatever we did. And I say y'all, I was like, bruh, Apple gonna fight. I'm like, Apple not even close to what they got going on. And so here we go. We're looking at Apple from the pandemic. Touch, broke out of there. Touch, broke out of there. And now look, they not nowhere near down here around this threat right here. Right? They nowhere near that threat right there. And you can say, okay, well, there's a support right here. But if you look up, I said, bro, Apple can go to 280. Look where it's at. 286, I put it right on the trend line. I said it can go to 280. Yeah, trap is all the high. Yeah. They can go up there. But if not, it falls. You either go there or you come here, find some support at 265. You find some support at 265 if you want. You know what I'm saying? And then if it did find support at 265, all you doing is this. Watch this. Ain't nothing but a base because that's coming off your impulse. So look, you got your base right here where it you had consolidation, or you can call this distribution. You had distribution right here, came down, popped back up. But if you look at it from an overall perspective, that's still stage 2. You come here, boom, stage 2. That's 100% of stage 2. You can't even deny that. That's a stage 2. Coming off the April lows, consolidate, right? Coming off the lows, consolidate on there. Consolidate. What does it do after consolidation? Pop up, boom, pop up, boom, pop up. So what you do? You consolidate. You accumulate. Then you go into phase 2. Boom, come down. Boom. That's another impulse, correction, impulse. Watch this. Distribution. Come down. Come right back up again. So it's easy to look at when you see it right there. It's not hard. And then these areas, because we still in that stage 2, these areas are necessary. You know why they're necessary? Because this is where the market loads up at again. It loads up. Yep, loads up. And then it gives you the corrective so it can do what? Shoot back up. So I'm not scared of none of that. So I like that. I still think Apple can go to 285. Before we see some type of, pushback. I think Apple can go to 285. So definitely, man, I hope y'all enjoyed this video. I hope this video helped y'all out. I didn't want to stay too long. I love y'all. I appreciate y'all. Make sure y'all get the Black Friday deal. Listen, man, I think now is the time for us to be buying amazing companies at amazing prices so we can position ourselves for 2026. I still think we can have a great 2026. I think it's going to be a volatile moment, but it's nothing we can't beat. It's your boy, the Wall Street Trapping, man. I love y'all. I appreciate y'all. Salute. I'm out.